Welcome back, everyone, to another stock market open live stream. Today is a very special day. How special is it? Today, we get to see the jobs report. Now, the jobs report is really the final catalyst of the week. Oh, my Lord. I don't even want to freaking hear the word catalyst anymore. I'm tired of this SH9T. This is some bull crap out here. Anyway, today is going to be the last of the caddies. We're going to get the deliciousness today of the jobs report. And then J-Pow is going to rug us. He's going to rug us hard. He's going to make us wait even longer. Now, look, one of the things to remember about this jobs report is that you have three choices as to which way it can go, and two of them are bad. Two of them are bad. All right? So, jobs report, the expectation is 175,000 jobs. If it comes in hot at 200,000 jobs, markets are going to go, oh no, I guess we'll have to wait even longer for interest rate cuts. And the market will sell off. If it comes in too low, markets might be, oh no, this is recessionary. Quick, sell everything. Which is also bad. Anyway. So, I guess now the issue is, how do we actually, oh yeah, and are we going to trigger the SOM rule? That's a good question. That's true. I didn't even think about it. You're right. That could be an issue. We would really have to see the unemployment rate move up, but you're right. All right, there we go. Threw up the little, we'll see what happens. I threw up the little banner there at the bottom. Little banner that was, and it's because we did extend the coupon to Friday. A lot of people wanted a little bit more time. All right, so let's put on some suspended. Oh, why? Oh, I know what happened. Oh well, whatever. I guess we'll have to wait on the music. Oh. I accidentally yoinked the HDMI cable out. All right, whatever. Here we go. 175 is the expectation, and the result is 114. Way low. Way low. Holy moly. Now, that's better than hot, but it starts looking a little like, oh, man, is that recessionary? That is way below expectations. Wow. Unemployment rate goes up to 4.3. That might trigger the SOM rule. Holy smoke-a-jokas. Mr. SOM is going to be like, you's going into a recession, bitch. That's definitely a two. See, this is what I'm saying. Like, you needed it to meet expectations. Because if it came in hot, it's bad. If it came in low, it was bad. Dude, and the prior report got revised down. Prior report got revised down 27,000 on a prior report revision down. And the the unemployment rate goes up 0.2 here, as well as the participation rate moving up. Okay, let's listen in over here.
Windshield. If we look at up 2/10, that is the lightest. It equals April. You have to go to February to find a smaller number when it was up 1/10.
Oh, that's the average hourly earnings goes up 0.2. The expectation was 0.3. So again, less wage pressures there.
3.6. 3.7 was expected. 3.9 in the rearview mirror becomes 3.8. 3.6 going into the Wayback Machine. You have to go all the way back to May of 21 when it was 2.3. So big drops there. Weekly average work week for all employees comes in at 34.2. We also lost a tenth there. Week shortened a little bit. 34.2 equals where we started the year out in January. To find a smaller work week, you have to go to March, of 2020 when it was 34, right on the nose. Now, let's look at the participation.
Yep. Someone says now we know why Powell was dovish. No freaking kidding.
Good news here. We're expanding. We're pulling some more in. 62.7. That equals where we were in April. To find a higher number, you go to November last year at 62.8. And finally, U3 was 4.3. U6, the underemployment rate, moves to 7.8. That is a huge jump from 7.4. I'm going to have to go in the Wayback Machine here. 7.8 would be the highest underemployment rate U6 since it was 8.1 in October of 21. We see that this weak data joins other weak data in pushing yields down. And what is notable here, and this is big time, 379 on a 10-year. Where did it close last year? At 388. It moves into the black and joins other maturities. That 2-year closed 4.25 last year, and of course it's trading right now at 387. And just to show you how huge these moves are, gang, 386 now in a 2-year. It closed at 438 last week. 10-year at 378, 379. It closed at 419 last week. So you could see these are historic rate drops, and they do portend the easing cycle that may be built in for factors that seem to be all
weird.
About weakness. Joe, back to you.
All right, great. Thanks, Rick. For more, let's get to our panel with Mark and Sarah. But I first want to let Steve start a little bit. It's impossible always to figure out what the stock market's going to do, although we see the initial reaction. But the unmistakable reaction in the bond market, which really started yesterday or the day, well, actually before then, but really picked up speed recently as we got under 4. So there's no doubt on how bonds are taking this news, Steve.
Yeah, I'm very interested, Joe. The first thing I looked at here was how the Fed funds market reacted. We went into this, just to set the table, a few days ago, there was no chance of a 50 basis point rate cut in September. We went into this with a 30%, and I don't know if this is right or real or whatever. And as Rick points out, this market can be very wrong. It can also be very right. A 72% chance right now of a 50 basis point cut in September. That's where the market is priced.
Said 50 earlier today.
I caution.
Because they can only.
Joe, this is one.
Steve, we went from 5 or 6 to 1 or 2. It's like, how do you get back to 5 or 6 when you only got, when it's already, getting toward, time is nigh? Well, you can get to 5 or 6 by doing 50 at one of them.
You can do it pretty quickly. And now I'm looking at the January 25 contract, Joe, at 413. So do you want to do the math on that? Is that 120 basis points of easing 125?
See?
That is
there
5 right there, right?
There's 5. They could get right back to it.
Let me just very quickly. I want to get to the panel. I know you want to get to the panel very quickly. I think the story I'm seeing here, and I've just glanced at it briefly, and I think the story in the economy right now is not that there's a lot of firing or job loss going on. There's not a lot of hiring. This is a weak report when it comes to hiring as you get down to what used to be a pretty normal level. 114 we'd be pretty happy with. A lot of the strength looks to be in the place where we had it, which is private education and health. And I want to just see here what the government number is. That's plus 17, so that's come off a little bit. But when I look at it, Joe, I don't see big negatives, and I don't see any big positives. I think we're at this phase right now where the catch-up hiring, especially in the health and education sector and in the government sector, that at least in the month of July has come to an end. Take it a bit with a grain of salt because it's only a single report, but it is indeed a weak report.
Sarah, I promise I'm going to get to you, but I'm interested to talk to Mark. Mark, I don't expect you to talk like an economist and give me, get in the weeds and talk. I want the big picture from you on this. And I'm not saying you speak for the Biden administration or.
Okay, I'm just gonna put it this way. There are a lot of people, in fairness, that are trying to blame Hurricane Beryl for this. So they look and suggest, oh, okay, hey, this is because of the hurricane. This, there are abnormalities here that are not going to be consistent. We'll have a strong jobs report again afterwards. I don't know, man. This is nasty. This is and again, I thought today was really a lose-win-lose scenario. In other words, you come in low, you lose. You come in at expectations, you're fine. But you come in high, you also lose. So a lot of losing potentially. Now this unemployment report literally came in lower than every single one of the 74 economists that are surveyed on Wall Street to come up with a Wall Street consensus estimate. All 74 missed. In fact, I wonder, like, I feel like I wanna turn into like Vlad here for a moment. I haven't listened to him in a while, and I'm also not really good in impressions, but you know, so I'm gonna screw it up. But I think all I gotta say something is something like, it's a 5 standard deviation difference. Five sigma event, man. 5 sigma event. That's what I'm feeling here. It's the hurricane, man. Nobody could have known. 5 sigmas. 5 sigmas. Oh no. Yeah. That's crazy. Yeah, that's pretty remarkable. Okay, what else do we have here? You had the prior downward revision. We saw that. We saw May revised down 2. June was revised down 27,000. Then you had... okay, sorry. There was one out of 74. I mistook this. I didn't actually see this. I'm looking at the chart here. So out of the 74, one person actually did have a lower estimate. I'll put that up on screen in just a second here. I think it's very interesting. There it is. Yeah, when I first looked at it, I just looked at this segment over here, and I saw this was 74. But I totally missed this right here. I don't know if it was how my screen was or what, or I'm just blind. But anyway, there was one economist that was down at 70K. That's crazy. Well, anyway, so out of 74, and they were wrong too. Just too low. But wow, that's a big move there. Standard deviation there was 23. Oh, so we can calculate the sigma here. If I do this correctly, I'll probably screw it up. But you know, I'm obviously joking here about the 5 sigma part, but now I'm kind of curious. So if the expectation was 175, and we came in, what did we come in at? It was like 114, right? Whatever. And the, yeah, they came in at 114, 61. 61 divided by 2345. That was only a 2.6 standard deviation event. But it's more fun to think of it as a Vlad. 5 standard deviations. Okay. So, wow. Let's see what else here. Yield curve has quickly started to disinvert. Okay. The 2s10 is now trading at -11. It's not far from turning positive. Keep in mind, a recession typically follows when the yield curve turns positive. Oh, no, no, no. No, 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 no. It is not good. Let's look a little bit at the pre-market here. Oh, you already got it up. This is ARM right now is down 535. Trade Desk is down 399. Palantir down 6%. Enphase down 5. VIX is up. The Qs are down 2.6. Oh no. Amazon, dude, it's down almost 10%. It's a 1.8. Well, it was a $1.8 trillion company. 10% evaporates literally $180 billion. You know, and I think the thing that's so insane is people don't realize. People think, oh, that means that money went somewhere, right? So where did that $180 billion go? No, you dumb nut. And it's not your fault. Our schools didn't teach financial education. Maybe somebody should try running for governor in California and try to get financial education in school. Oh, wait.
Anyway, that $180 billion that disappears at Amazon disappears, poof, and virtually nobody gets it. It literally just vanishes into the ether. It disappears. It's gone. Poof. The fugazi is over. The money's gone. So when Amazon goes down and loses $180 billion, yes, maybe some people got a few $1 million out at a higher price. But otherwise, the vast majority of people exposed to Amazon stock just poofed $180 billion of wealth. Gone. It's crazy. Crazy. Okay, the 10-year treasury just plummeted to 3.83%. Oh my gosh, it's down 14. Wow, even the 2-year is under 4 right now. Oh, lordy. 2.6. All right, so let's write this down. 2.6 standard deviation miss at 114 versus 175 expected. Unemployment rate up to 4.3%. Oh boy. Okay, all right. This is gonna be a day. All right, what's the 2s 10? 2s and 10s. Oh boy. 210 curve at negative 11.5 BP. Then we have, who's gonna update as to whether or not the SOM rules trigger now? Okay. Somebody says no YouTube today, Kevin. You know, you gotta go to the Meet Kevin Market Live channel. It's not your fault. I blame YouTube for not pitching it to people. But Meet Kevin Market Live. And you'll be able to see it there on YouTube. So anyway, this isn't good. You know, now, unfortunately, you're going to create an environment that basically says, hey, we need to price in a real recession here. Unfortunately, the yield curve will be right again. No. Yeah, this sucks. All right. Jeez, Lord. Man. All right. Where are the emergency cuts? And they're not going to cut off one report, though. That's the problem. They're going to want to wait another month. So, here's a reporter that says, oh my. Oh, this guy's really smart, too. Let's see here. Where is it? Oh, actually, hold on. Let me go here first. There are a few things I want to see. Yeah, I don't think there'll be an emergency cut. It's just, you can't emergency cut off one report. That'd be the opposite of what the Fed talks about. Wow. Whoa. Look at the rates pricing. Okay, let's write this down. This is a huge move in rates pricing. Okay. All right, we gotta talk about this. So, we are now pricing in a 1.7 cut for September. That means we're starting to price in 50 bips by 74% chance of 50 bips. For November, we are pricing in 3.3 cuts for November. Oh my gosh, rates are about to plummet. December, 4.4 cuts for December. January, we're pricing in 5.4 cuts for January. Oh, Lordy. Oh, Lordy. Okay, what is this? Today's labor market will do nothing to assuage concerns about the state of the economy. No kidding. Highest read in the unemployment rate since October 2021. A lot of that due to increased participation. Households report rose just 67K. Wow. Okay, and then the non-farm payroll. Yeah, we already got that. Okay. Wow. Man. Oh, no. This sucks. Yeah, like, wow. Main data points show jobs market has turned. All the main data points are telling us the job market has truly turned now. This would seal the deal for a Fed rate cut in September. No, duh. I mean, at this point, people are going to start yapping about emergency cuts. It ain't going to happen. Which means, honestly, between now and September is about to be hell. Because everybody's going to wait for the Fed to show up on their white horse. Sorry, I start thinking about people talking about emergency rate cuts, and I'm like, oh my gosh, sorry, I'm allergic to bullshit. Ooh. Oh, it just comes over me. Ay, ay, ay. Oof. Ooh. Oh, all right. Oh, my lord. This is not good. Bonds at risk for sharp sell-off with upside surprise in jobs. Duh. Let's see. I don't know about that. Here's somebody who thinks that this payrolls report, what is this? Okay, no, I'm misreading that. That's fine. Okay, let me listen in over here for a moment. Get situated again.
Just let the market do it and stop with this.
Well, one thing we know is when you distort the market so much by having a zero interest rate, you cause all kinds of malinvestment. You don't allow price signals to operate effectively, so you don't know how to have capital flow to its optimal use. And it's clear we needed to come up from that, and that does feed inflation. But I think I would have quit at 4.25%, 4.5%. That's where we were back in December of 2022. And then let the market sort it out. The Fed should be relying more on open market operations. And that would kill two birds with one stone, because they should be reducing their footprint in financial markets. They should be selling off part of the portfolio.
Making it advantageous for banks to act certain ways at the expense of entrepreneurs and innovators.
Well, what they do now, the Fed's main tool, unlike when Paul Volcker was the chairman, the Fed's main tool is a very perverse incentive. They are paying this high rate, 5.4%, to commercial banks to keep the money sitting there stagnant. This is like paying farmers not to grow crops or paying people not to work. It doesn't make sense.
We've done those things before, too.
Yeah, and I think it violates, it not only encourages entrepreneurial endeavor, but I just think that it's sort of a, you do interest rates by diktat instead of letting the organic forces in the economy, the people who are really there, they should decide the cost of capital, because we're seeing that Federal Reserve officials are not omniscient, and I think that panics the market a little bit.
The one thing I would say is it has benefited us greatly over the last 20 years in times of crisis to be able to have a Fed that could react quickly. I just think back to the financial crisis. What would have happened potentially just in terms of the unemployment rate, of the pain that would have come. Not arguing you could push it off for forever and make it never come.
Okay, I want to look at the SOM rule quickly here. And when, in recent history, it triggers versus where recession is. So we're going to get rid of COVID. And let's zoom in for a moment to the last two. So the SOM rule would have triggered... Let's see here. We need this. Let's see. So to get to 100 basis points, you would have been between July and August. And to get to 100 basis points here, you would have had to have been at October 01. Now, what's really interesting is the market didn't bottom until March of 03 and February of 09. Fab 09, right there. So the SOM rule was at 2.77. I mean, you had time to go in the last two recessions. 91, I don't remember when the bottom was in the early 90s. I'd have to look. Yeah, I'd have to look at when the bottom was on those. I just remember off the top of my head the bottom in these two markets. Shoot. See, now that's really interesting because let me see. The SOM rule. Oh, it's only by a 0.5 percentage point. Oh, it's even worse. I thought for a moment it was 100 BP. No, it's only a half. This only has to be at... Oh, it fires early. No. I mean, you were already halfway into the recession, but you weren't close to the bottom. Oh, look at that. So you broke 50 basis points in June of 01. Write that down. Someone, please, go write that down. June of 01. Oh, my Lord. And April 08. Okay? So, June 2001, April 2008. So this would be outside of... When was the SOM rule triggered over 50 BP? June of 01, April 2008. Market bottomed. Stock market bottomed. You sort of had a double bottom. So if I want to be generous, I could go to September, which would be about July, August, September, 15 months. 15 to October, November, December, January, February, 20. 15 to 20 months later. And then in 2008, stock market bottomed 10 months later. Wow. Okay. Very interesting. So, the SOM rule today... SOM rule was triggered today with a read of over 4.2%. So, and 4.1 was expected. We got 4.3%. Now that's very interesting. So, okay, how's the market behaving after all this crap? So it looks like IWM fell from about 113 to about 107, and it's balanced at about 109. Looks like you're definitely lower on the Qs than where you were. You're down about another 50 basis points from where you were. Amazon added about 2%. Looks like it bounced right on the Meet Kevin 165.7 line. Trust the lines, bro. Tesla looks like it dropped from 115 to about 215 to about 212. That's where it sits now. Trade Desk down about 80 to 84. ARMS sitting down about 4.4. You know, surprisingly, Bitcoin is actually up. Ay. Manufacturing report showed drop yesterday. Yeah, no kidding. Why is AMD up? If AMD is up, it's probably up. Up 20 basis points. I mean, who cares? I'm gonna say, when you're bouncing around the recent bottom, I might get a little bit of pity green.
All around solid third quarter, although China sales were weaker than expected. Everything else looked like it was incredibly strong, stronger than the street had been anticipating. Tony Sacconaghi is here. He's Bernstein's senior research analyst. And Tony, your take on this, I think you wrote something that said clean living. What did you mean?
Good morning, Becky. It was a solid quarter for Apple. The numbers were clean. They beat by a little bit, and they guided up modestly relative to expectations for next quarter. So there's been a lot of drama in tech land over the last several days. Apple doesn't fit into that category. They delivered slightly better than expectations and projected a pretty positive tone about the forthcoming iPhone cycle, which is really where investors are most focused.
We did mention that Apple's China business was down. I think it was down 6.5% year over year, maybe 10% sequentially. You want to put a little context around that?
Sure. So that was actually a little bit better than we had anticipated, Becky, because the last 3 years on average, Apple's been down about 16% sequentially. And so, yes, they were down handily year over year, but they did have a relatively tough comp. And we do believe at the margin, China was a little bit better. Now,
by the way, somebody says, if you were a 2.5 on the scale yesterday, what are you today? Take another point off, man. Oh, no. You know, look, I'm not often perfect on the day-to-day. I try my best, but I started feeling like shit July 11th, and every day in the Course Member Live, I'm like, I don't know, man. We don't want to see that July 11th trend again, and we saw it like 3 or 4 times, these sudden sell-offs, the spikes in the VIX, and we're like, raise cash, go make some more money while you can. I don't know what's going on. We've been saying it for 3 weeks now. And putting money where the mouth is. So, you know, this is not about being right. This is about, it's really bad if you go into a recession. It just sucks. Really, a lot of people lose their jobs. People are like, oh, I'm going to buy houses cheap. With what money? You're going to have lost it all in the stock market because Tom Lee told you to buy small caps going into a freaking recession, dumbass. Small caps are the most risky investment you can make in a recession.
External AI with OpenAI and bring that to its customers. It doesn't need to invent AI, and accordingly, it doesn't need to invest in large language models to the degree that others. It doesn't need to operate these data centers. What it's doing is providing access for...
Who gives a crap about Apple right now, bro? Jeez, goodness gracious, Lord, gosh. Change the frickin'... I had to click away just from CNBC in general. Because here you are. We're going into a frickin' recession and you're talking about Apple? I'd rather listen to Rhonda peddler here, or that Peter Schiff brother guy or whatever. God. Tired of this. Huh. Freaking mainstream media is some trash. Every day. Try to go somewhere. Here, we have a panel. What is this? Finally, an economic panel. Look, the guy's got a yellow tie and glasses. It's like Jay Powell's dad, or a guy with a toupee.
Michigan and Arizona and Georgia and so on. But somebody made a really good...
Jason Van Mill says, you sound like a bitch. Just because I am, okay?
Higher taxes. How's that going to help?
Good point. Julia Pollack, Steve Moore, Stephanie Pomboy, Joel Schulman, John Lonsky, Cheryl Casoni. Great conversation. Join me on Sunday Morning Futures for more of my interview with President Trump. That's Sunday on Fox News. Have a great weekend, and we will see you next week. Varney & Company picks it up right now with a major sell-off underway.
In person, unfortunately. I mean,
Thanks,
you know,
Andrew.
it'd be nice to stay here longer.
No, we had a great time together.
No,
Who wants
we
to be
did.
in
No, I don't.
Paris is amazing.
I mean,
I want to stay here.
All right, we got it. You join us. Squawk on the Street is next.
Good Friday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer, David Faber at Post 9 of the New York Stock Exchange. Futures are sharply red as this growth scare picks up some steam, and July jobs miss 114,000, smallest growth in almost 4 years. Yields plummet to the lowest since December. Our roadmap begins with mega cap tech, though, and this big stock sell-off. Apple seeing a continued...
But Jay Powell said this time is different.
To ratchet up AI spend.
We'll also keep an eye on big oil. Of course, you got those tensions in the Mideast. Exxon banked one of its highest ever profits for the second quarter. Rival Chevron's earnings did miss expectations. We're also going to watch chip stocks, of course. NVIDIA, certainly, but what about Intel? Those shares are going to be down sharply on news of a $10 billion cost-cutting plan. The company's going to slash as many as 15,000.
Why would Nancy Pelosi buy 1.5 million of NVIDIA just days before the recession? Ooh.
Cap tech results and the jobs number today. Hiring did slow sharply in July. Jim, yesterday you said you thought the Fed probably should have moved in July, and now the market's looking at 50 in September.
Thank you, Carl. Yeah, I just think that they misjudged the month, the Fed. It was a very weak month, not a lot of jobs created. There are a lot of things that happened in the economy, and also things that happened in the other world, the real world. in terms of what happened to former President Trump, and I think people were transfixed. What?
There's music still going.
Yeah,
I don't know why. It's bothering me.
I don't
Sorry.
know, but to get maybe it's like that bear.
I actually kind of like the music. It's like the market sell-off dramatic music. It reminds me of COVID when everybody was losing money and the circuit breakers were going off. It was a horrible time. But I don't know why I look back at it and I'm like, those seem like kind of, interesting memories. We all got to kind of hang out together, stuck in our homes. Obviously it was terrible, all the people dying, of course. But I'm just saying, we all got to hang out together a lot, and it was intense. Anyway, there's nothing more intense today than Intel Corporation losing 24%. Holy crap. IWM down 3.4. I did not buy enough puts. No. ARMS down 5.2. Trade Desk down 4.6. Palantir 5.33. Oh my god. Enphase down 6. Q's 2.4. Amazon almost 10. Tesla 3. Apple almost 2. SPY's almost down 2. Bitcoin is not going down. 64.7. Doesn't make sense. It will catch up. It always does. Cloudflare holds on to its 5%. You know what I said yesterday? Yesterday while we were playing, working in Rust, I said if DoorDash goes negative tomorrow after being up 13% of the, post hours, we're probably in a recession. It's at still up 8% yesterday, but we'll see what happens. We shall see. Oh, no. See, I shouldn't freaking doubt myself. Starting July 11th, I started picking up SQQQ calls. And I'm like, I don't know, man. I don't feel good about this. I don't feel good about something's happening. Something's happening. I don't know what it is. And I'm screaming that every single day in the Course Member live stream. Every day, almost. Okay, maybe not every single day, but we were talking about it almost every day. And, yeah, now we know what's been cooking. Now the question is, where's the frickin' bottom? Where's the bottom? Kevin, would you buy more bonds at this point? Honestly, it's probably not a terrible trade. I mean, you could always get bounces here, but you go into a recession, that 10-year's gonna plummet. It's probably not a bad idea. And what you will really, you need if you could get like a 2-year bond ETF, that would be interesting. Dude, it's down 20 bips today. 2-year bond ETF. Let me see here. iShares 1 to 3. Okay, let's see what this is. Let me see what the 1-year is. The 1-year ETF, or sorry, the 1-year Treasury rather, is at 4.4. Oh yeah, baby, that could actually be nice. Okay, so what is this called? SHY? SHI? SHY. Duh. Okay, low expense ratio. What's in this sucker? So holdings, United States Treasuries. I don't know if this is more of a cash play or if I can make a bond play on this. Well, let's find out. SHY. Oh yeah. Oh yeah, baby. I mean, bond ETFs don't really move that much, but it's also early. So this sucker's been... Oh, okay, here you go. Oh, that's very interesting. So it's... I don't know how they balance, how they work that out, but this is very interesting. It's been sort of trending up since about the end of 23 as inflation has been going down. That could be interesting. What about like a 5-year? Let me try iShares 5-7 year. Yeah. Do I think bank runs? I personally think the banking crisis is over. I think what happens now is much worse. Everybody loses all their wealth. Okay. So IMTB, what's this? IMTB. Yeah, this one doesn't move. I mean, certainly moved down since 21. That makes sense. And you've moved up about 10-ish% here from the bottom. Shy is interesting. Yeah, that's very interesting. Okay, what has pricing power in a recession? Oh, God, no. I don't want to have to look this crap up. I don't want to be in a recession. All right, here, hold on. Let me turn on poverty chat. I want to hear from poverty chat. What has PP? What has large PP in a recession? All right. Somebody says defense. Bro, there are no wars. We never spend money on utilities. Somebody says Walmart, McDonald's, insurance. Have I ever mentioned that you can get life insurance in as little as 5 minutes by going to metkevin.com/life? It's a paid promotion of the channel. It's what Lauren and I use. You could Apple Pay or Android Pay for it.
metkevin.com/life.
How did gold perform? Let's look at like IAU. Oh, I don't think that was around in the last recession though. Oh, it was. Oh la la. Where's my boy Steve? Where's my boy Steve? Hey, Steve. Spawn back in. Gold or silver, Steve? What are we doing today? What's the trade? Are we going for uranium? Let me see here. Yeah, silver's up 2.5. Gold's up 1.5. Wow. Wow. Let me see here. Booze and cannabis? Bro, where's the party at? BTC equals gold. Dude, I think there's... and you know what? I am not afraid to make a prediction and be wrong, because I'm not a little weenie. But I think BTC, if we go into a recession, trades as a risk asset here, not as gold. ZA, ask during the course member chat this morning. We'll take care of you. Yeah, central banks are not buying BTC. I agree with that. Insurance and healthcare, guns and ammo, booze and cannabis, TMF. Yeah, and that's your 20-year. Yeah. Oh, I'll get that taken care of, J-Pep-How. I was playing too much. I mean, working too much on Rust. Poverty chat over elites chat. Oh, we're going to start a war here, man. Why not stay in money market instead of the bond ETFs if yields are very similar? Because money markets don't have or don't create capital appreciation. You know, a bond ETF, if you think yields are going to fall, the bond ETFs that are like, you know, the 3 to 5 year or even the 1 to 3 year, they'll have capital appreciation, but the money markets won't. Oh, my Lord. BNPL? Bro, BNPL is going to go into a recession. Or it's going to go bankrupt. Kevin, what have I been telling you? Steve, you've been telling me to buy gold, goddamn. Okay, I shouldn't say that. Don't use the Lord's name in vain, Kevin. Dollar stores, cheap clothing, storage companies, Walmart. Walmart. No. Kevin, do you use Lyft? Oh, it says, I thought you meant, do I use Lyft, the car company? You're asking if I lift. Bro, the only thing that I lift is in the morning, a cup that looks like this, and in the evening, a cup that looks like this. Never mind. You sent me some charts in the course thing. Constellation Brands. Constellation. You know, people are like, oh, but BlackRock bought a bunch of BTC. Bro, you realize they make a ton of money off their BTC ETF, and whatever they could do to advertise that ETF is what they'll do. They're totally biased. Totally biased. All right. From Steve. Steve the Dell guy. Oh, no. No. All right. Let's see what commodities Steve has to say. All right, Steve, the Dell gold guy. What happens to gold when the Fed stops hiking rates? Gold in the U.S. and Fed funds rate. Down. As soon as they stopped, gold up 43%. Stopped, gold up 76%. Stopped, gold up 54%. Stopped, so far up 5%. I don't get it. I don't see the trend. That's pretty cool, dude. That's pretty impressive. That's a good one. I like it. Now, in fairness, none of those were a soft landing. So now I'm gonna have to fact check you. Price of spot gold, St. Louis Fred, and I have to check the soft landing because obviously we're gonna have a soft landing here. Sorry, I couldn't even believe that. Let's see here. Gold. Bro. Price of gold over time. Jeez, why is it so freaking hard? Alright. I want to go back 30 years. Ah, see? That's why your chart didn't include it, Steve. That's why you didn't include it. I got him. I got him, boys and girls. Got him. Got him. Why didn't they include the 90s? Because it went down in the 90s. Like, a third. Got him! So, okay, fine. So, soft landing, gold down. I mean, that makes sense, though. Recession, up. Recession. 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 But this time is different. Tom Lee is always right. Dude, I wish I had a screenshot of it. I probably do somewhere. This dude, actually, I think I put it in a live stream. This, like, financial advisor dude. You know, I tweeted, I'm like, I'm worried that we might be trending into a recession, you know, a couple weeks ago, and you shouldn't be buying IWM. And the guy's like, yeah, we'll see how this plays out, Kevin. And that was on a Thursday. And he's like, you're probably going to be wrong. Tom Lee's right here. And then literally the next day, like 1 day later, IWM was up like 1.5%. And he's like, looks like Tom Lee was right. Kevin wrong again. Big L. And I'm like, it's been a day, you jackass. I didn't actually reply to him, but I was thinking about it. And I'm like, so now, today, I go back and look, and he deleted his post. Witty!
On Twitter had from the office, Michael
I still love
Scott yelling and screaming at everybody, calm down, everybody be calm.
I apologize to David. And if I was out of line, you cry, I apologize.
We'll take a quick break as we continue to watch this global sell-off. We'll talk about some of the market action overnight in Japan, now 15% off of the July highs. We'll get to the oils, Snap, Booking, DraftKings when we return.
Somebody here says, you are some arrogant SOB. You just figured it out? Boomers choose real estate over metals. I love real estate. Hate is gonna hate. More gold. Should we buy puts as soon as the market opens? This time is D's nuts. Okay. So... I don't know, man. It's, did I sell my me call? No, I didn't. I know she has a proposal to buy it at 40 cents. I wouldn't be surprised if that gets forced up. So I'm just gonna, like, or somebody's gonna come buy him out now that that's in the news. I'm not giving up that me's gonna get acquired. So that's an October item anyway. So, you know, we got a whole recession to get through. Oh, all right. What do we got here? We got a little bit of recovery in some of these. Look at this. So IWM trying to come back a little bit. Trade Desk trying to come back a little bit. Maybe a little bit too much selling there in the... oh, look at that. Even the Qs are coming back a little bit. Maybe a little too much selling, too much panic there at the... what's it called? On the news. So I don't know which direction things are going to go at open. That's always the toughie. Like... You know, you can you can get a lot of green days in the middle of a recession. And then people every day, oh, recession's canceled, and you just kind of trend down. I personally hope we have a big bounce at the open. And then it gives you a chance to sell more stock if you want to. Now, let's look at some of these tickers y'all mentioned. Let's go with Constellation Brands. Who the hell is this? All right. So Constellation Brands, it's, you know, a little up there in terms of where it's been on pricing. What is this? Constellation Brands. I can't believe I have to write that. All right. Oh, this is Modelo. Oh, okay. Brands, beer, wine, spirits. Got it. Okay. What about like, Procter & Gamble? Let's look at Procter & Gamble. How's PG been? I don't know. It's pretty up there. How about Walmart? Bro, there are no discounts to be had. My favorite stock is cash. Costco. Yeah, well, that's not really on sale either. American Power. Oh, well, the power companies and utilities probably ran up on AI, though. Yeah, no, these suckers all run on AI. All right, hold on. What's this? What are you yapping about?
Last year, and we continue to see the trends that we've seen for some time, not just with Ford, but all of the legacy automakers. Internal combustion engine vehicle sales down 5% in July compared to July of last year. Where is the growth happening? At Ford as well as with other automakers, but you really see it at Ford. EVs and hybrids. EVs up 31.2% year over year, and hybrid sales. Look, they're killing it when it comes to hybrids, especially the Maverick pickup truck, up 47% year over year. Again, Ford sales overall down 0.2%, essentially a flat month compared to July of last year. Guys, we'll send it back to you.
Okay, Phil, we'll see in a bit. When we come back, Kramer's Mad Dash will count down to the opening bell. Take another look at futures. Off the session lows, but the VIX still at 21. 2s, 10s down to 11 basis points. Stay with us.
Holy smokers, this is not, let's see. I want to see, Walmart. Yeah, look at this. Walmart's barely down. Procter & Gamble's actually up in the pre-market. Constellation Brands up in pre-market. American Power up, Monster Beverage up, Dollar Tree up, gold up a little, 25% still on Intel. What is this? You've got the Qs. Qs are still about 2% down, but they've tried to trend up here. So is Tesla. Tried to come back. Amazon's trying to come back from its 9% hell there. Let's see here. ARM. Oh, look at that reject. Right at 117, that rejection. Oh, it's the lions. The lions, I say. If the U.S. goes into recession, what does that do to China stocks? Roblox, Chipotle, down. Yeah, McDonald's is up. The recession fear trades are coming. McDonald's, you're going to get, oh, you got to buy the dip on McDonald's. Holy crap. Oh, la, 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 la. Oh, hallelujah. As we say in Germany, kein Stuhl da. All right. So, Mickey D's. Mickey Dizzle Doozles. Let's see what the pizzles is on this one's. All right. The pizzle de bizzles is $11.81. 270 divided by $11.81 puts us at $22.86. We're gonna add in some growth here, even though we probably shouldn't be calculating growth numbers on a recession play, but we're gonna do it anyway to figure out what the PEG ratio is. And this has a projected growth of about 9% per year. We're gonna divide that number into that number. McDonald's is trading for a 2.5 PEG. Damn, man. That's not a deal. Come on, man. Maybe it's some of that fear priced in already. How about 3M? Well, 3M's like manufacturing. So Procter & Gamble. I'll look at Procter & Gamble quickly. Okay. Procter & Gamble is 165.69 divided by 695 is 23.84, 23.84. And we're going to get the growth of 6.8, 7.39 plus 5.84 plus 6.23, 26.26 divided by 4 is 6.5% growth. And we have 3.6 PEG. Oh my. Oh, where are the cheap? You know what's cheap right now is cash, baby. Kevin ist in Deutschland geboren. Das ist richtig. Deutschland, das Wunderland. All right, let me see. DLTR. DLTR is down at 3-year lows, says someone. Yeah, so's Tesla. Oh! Okay, it's actually not at 3-year lows yet. Oh, that's even worse. How could you say that? 99.75 divided by 6.65, trading for about 15 times earning, 15 times earnings. Let's add in some growth over here. Dollar Tree expected to grow at about 14.75. That puts us at about a 1 PEG. I like the Dollar Tree. Unless the Dollar Tree is going bankrupt, I like the Dollar Tree. Dollar Tree, look at that 3-year downtrend. Dollar Tree Investor Relations. And then, it's Baby ausgewandert. Yeah, that's right. What was that, like 13 months old or something? Got up and walked out. Kevin is losing his mind. How late could you be? Yes. All right, let's look at the thank you on the Dollar Tree. We have sentiment in the toilet. We have the valuation in the right spot. Oh, do we have pricing power? I don't know. Does the Dollar Tree have the pricing power? I don't know. But what is the bankruptcy risk? I will now assess the bankruptcy risk. We will begin by assessing the patient's vitals. First, we will begin by taking the temperature of cash. 618 million.
Now we will evaluate what kind of disease we have.
Oh my gosh, $4.7 billion of current liabilities? Holy crap, this is a screaming bankruptcy risk. Inventories of $5 billion, sure, maybe. Now you gotta sell all of that just to pay your current liabilities. And then you have other liabilities, long-term debt 3.4, that's not so bad. You gotta sell, I mean, okay, what's the cash flow?
Let us see if we can stop the bleeding. The bleeding is... Oh, we do have cash flow.
$200 million of cash flow. All right. They're able to pull it off. Oh, it's not the strongest.
The balance sheet is not very robust. The sentiment is in the toilet. The question now is, do they have pricing power? I don't know. Let's see if the margins are going up. If the margin's up, I think pricing power a little better than not.
Okay, cost of sales, 5278.7 divided by 7626.4 equals 69.2 cost. Of course it's 69. And it was. So we need a number here that is greater than 69 to imply any form of PP. Cost of sales, 5089.1 divided by 7319.5 equals 69. Same. It hasn't changed at all. PP has stayed the same. I don't know, man. I'm gonna have to put some thought into that one. What's going on over here? Hey, have I mentioned, by the way, that you can still take advantage of the coupon code on the courses on building your wealth by going to makekevin.com? We did extend the coupon by a day. I hope you don't mind, but we will be raising the pricing tonight, so go check it out. Oh, we're still a minute away from the bell. I thought that said 29 for a moment. I misread that. Maybe I should stop trying to do emails and stock analysis at the same time. Here we go. All right. Get your trading fingers ready. The world is about to lose lots of money. It's just gonna evaporate into thin air. Womp, womp, womp. Tesla's only down 1% on this. Oh, ARM's down like 5.7%. What's NVIDIA then? ARM follows. Oh my gosh, NVIDIA's down another 5%. Oh no. But BTC is not really moving down. Yeah, BTC's up 64.8. I don't know. Is that gonna last? We'll see. Let's listen in to the bell.
Separation from Howard Hughes Holdings. A big New York City story as downtown gets developed. At the NASDAQ, it's New York City Dance Company, Battery Dance. As we'll look for some opening levels here, Jim, and watch the breath fill in.
Should we let it come in and do some buying? I'm going to say yes. I know, look, it's so early. It's really 2:45 that tells the tape. When 245 on Fridays has been the deciding point about what happens. If the market's going down at 245, look out. If it's turning, we're going to be fine. But that's the fulcrum moment. I don't want to do anything before 245.
Here's a look at the Dow. About 1%. We'll keep our eye on yields, as we said. Got to 379 on the 10-year.
All right, here we go. ARM's down 7. NVIDIA's down 5.9. The Qs are down 2. Can we stabilize? Tesla's going red. IWM's trying to stabilize. Can this turn around and go green? Turn around. Turn around. BTC says so. Red candle, red candle, red candle, red candle, red candle. Oh, it's getting worse. Ah! Ugh. There it goes.
Who said buy puts? Quick! Buy more puts! Oh no, no, no. Tesla. Tesla, no! Not it to Tesla.
Okay. American Power up to 9. Dollar General hasn't really moved yet. McDonald's, man. Yeah. Mickey D's trying to pop up again. Okay. Nvidia, green candle. Recovery. All in calls. Let's listen in, Jimbo.
You really get concerned about a consumer, the last thing they're going to stop paying is their cell phone bill.
And look, obviously, if you want to get lines and you're T-Mobile, you don't want to lose market share, Carl, you're going to call Timothy Donald Cook today and say, you know what? What do you got for me? And he's not going to say ain't got nothing for you, because he is not Jeff Probst. He is not Jeff Probst.
Did you have higher hopes for iPhone down 1?
No, I thought that iPhone was surprising that they gained share in China, and the three biggest urban markets went for them. I'm focusing Philippines, I'm focusing Indonesia, I'm focusing these big India. These big markets are really good. I'm focusing service revenue, which is
AI is helping the pricing on the ad side. So the core legacy bread and butter business is actually pretty good. In case you don't know, there's a social platform called Facebook, and it makes money with ads. And,
I've heard of that.
One was reminded of that this week. Yeah.
Listen, I want to point out here that the NASDAQ 100 falling 10% at the open means that it's sent to enter a correction territory here.
Yeah.
Intel today being the worst of the decliners in that NASDAQ 100.
Yeah.
Give us a little sense of how deep the pain is there. I mean, the drop you're seeing today is staggering.
This is very bad for Intel. It's very bad. And when the numbers dropped, the CFO, Dave Zinsner, phoned me, and basically the admission is that they had not, in a timely manner, adjusted to the reality of their revenues. Their core businesses are not doing enough to support what they want to do, which is move into data center. They're overexposed in the CPU market, when what we just talked about is investment in GPUs. And so they have to cut headcount 15%, adjust OPEX and CAPEX, and make some very painful operating decisions to protect cash flow to change this business going forward. The turnaround plan, unfortunately, is not working right now.
And I have a great guest sitting to my left, but can I just say it's been so lovely to have you in New York this week?
It's been really good to sit here next to you. It's like Super Bowl week for me. And it happens 4 times a year, but it's been great. Yeah.
Come back to New York every time for it.
Ed Ludlow, it's great to see you. That, of course, is Bloomberg Technology co-host Ed Ludlow. And joining us now, also, I'm thrilled to say, we have Savita Subramanian. She is head of U.S. equity and quantitative strategy over at Bank of America Securities. Great to see you in person.
Great to be here.
Let's talk about tech.
Oh, goodness.
It feels like for so long, at least the last couple of years, that tech has been the safety trade. When you would see an ugly jobs report like this, you just go into the big FANG stocks. Now we have not so great earnings.
Right.
Is tech still the safety trade?
Well, look, I think parts of tech are still a safety trade. And I think what we're seeing right now is pretty classic. You're seeing software, which is more defensive, hold up better than semis, which is more cyclical. We are seeing some of the more crowded areas of the benchmark get sold off harder. And I think what's interesting in tech is that companies that are beating on sales are outperforming companies that are beating on earnings. So it's not just about margin, it's about top line. But I think the problem is we're at a point where all these, these tech companies and the Magnificent Seven and this AI theme has been kind of buy the story, and now it's show me the money. And that's where we're seeing real differentiation between companies that are doing things well. As your former guest was pointing out, some companies are actually monetizing their CapEx. They're seeing better pricing. Other companies aren't. And that's where we're seeing this differentiation.
So where are you seeing the strategy?
It's really interesting, by the way. BTC just hit 65 again. We touched this yesterday. It's actually popping up a little bit. So who knows? Maybe some people are kind of trading this like frankly, digital gold, which a lot of people do talk about that. I personally see it as a risk asset, but that doesn't make me right. So we'll see. This is very, very interesting. You've got NVIDIA's trying to recover here. ARM's still down about 8%. You've got IWM's down about 3.6. Tesla bobbing around 1.3. I kind of like shorting it right here. Sorry. But you are getting a bit of a bounce here at the open. I love that. I think there's an opportunity to what's it called?
short it if there is bounce or sell. This is interesting. Nice bounce so far within the first few minutes. And people really got to digest, okay, what's going to happen here. But you are getting a bounce. Did think there was going to be a bounce at the open, and that's somewhat what's happening. It took a few minutes. It took us 1, 2, 3, 4. It took about 5 minutes to get to where we're bouncing. And I don't know how robust that's going to be, but let's see. Getting a bounce to continue here. Bounce here. Tesla's stuck a little bounce on the IWM. Will that bounce hold on the Qs here? Let's find out. And then we've got Nvidia bouncing. Can it hold? Can it hold? Yeah, Nvidia's trying to hold on to it. Let's see if it keeps going. What are they saying right here? But so far, you're getting a little 3-4 minute bounce now. Nvidia keeps going, now at 3.3 negative.
CapEx, building out data centers requires a little bit of, other stuff besides just tech CapEx. And we've got an environment where both sides of the aisle are focused on bringing IP back to the U.S. and bringing jobs to the U.S. What does that mean? Activity in the U.S. has basically doubled from 2018 to now in terms of driving and, moving stuff around. And that is taxing the infrastructure, which is already super old, right? I mean, you look at our economy, our manufacturing complex.
You take the subway.
Exactly. Take the subway as a case study in old infrastructure. I think that's the story here.
I want to talk a little bit more not about the fiscal.
All right, let me see here. Qualcomm's down 2, Supermicro's down 7. It's at 624. Oh my gosh. Starbucks up 80. I always thought that one was so overpriced. Wow, but I wasn't expecting it to sell off like that either. That's crazy. Nvidia's only down 2.7 right now. You are getting a recovery on Nvidia. Nancy Pelosi knows where to put her money in a recession. All in on Nvidia, she says. Wow. Tesla down 1.5. Qs are only down about 1.8. Bitcoin still holding on to 65,000.
The economy playing through right now, and that might make the first Fed rate cut less extreme. In fact, the old kind of playbook is buy on the rate cuts, and I think that might be kind of more of a story for maybe next year. But our target for the S&P is 5,400, and we're sticking with that. We didn't raise it as the market shot past it. I would stick with it today unless we see demand, consumer, all of the attributes, and business investment really fall off a cliff. So far, CapEx has been strong, and I don't think it's changing.
And just to go back to that point, buy on the rate cut, that was also supposed to be the playbook for small caps.
Yes.
And I'm almost scared to look at what the Russell 2000 is doing right now.
The Russell 2000 is a different animal than in prior cycles, and I think that's what we need to remember. The Russell 2000...
Oh, yes. This time is different, friends.
...sensitive companies that would benefit from a growing economy. Today, it's half that, but also half a graveyard of old large-cap companies that have refinancing risk.
Fallen angels.
Fallen angels, exactly. Those could do all right in a Fed rate cutting scenario because their refinancing risk is capped and mollified. But I think the idea of small caps just being this monolithic structure that's all going to do the same thing in a rate cut scenario is not necessarily the case.
Savita, stick with us. Of course, we're going to get right back to you. We're going to take a check on the markets, though, because, of course, as Katie has been talking about, we are looking at an ugly tape. We are looking at an S&P 500 down 1.3%. NASDAQ 100, 1.6% lower, really flirting with correction territory here. The Russell 2000 is just taking a beating at 3.5% lower. On the week, it's nearly 7% lower. We'll bring you more as we have it. Stick with us. This is Bloomberg.
All right, let's listen it over here.
Ironic. So last week at 5 o'clock, Abbott lost a case, called NEC, for a very serious illness that a plaintiff said they caused. It was a $495 million loss by Abbott, and it's had the best week it's had in ages.
Yeah.
What does that tell you? That people rotating furiously into recession stocks. I think that's all right.
Are we really going to have a recession?
No, we're not. David, people are doing stupid things. They have right of First Amendment. You can do all the stupid things you want.
Well, you say people. I mean, it's
People-
mostly,
these
it's
are people
mostly
who need
algorithms
people.
and machines.
No, Jim Cramer says, no, we're not going to have a recession. No.
That's always the case. A Roach Motel now.
The IWM, yeah.
I mean, as far as recession goes, Atlanta Fed's running 2.5 for the quarter.
Right.
Although DRW does point out the unemployment rate, Jim's 9/10 off the cycle low, and it typically doesn't stop there.
No,
once
it
you're
doesn't.
up that much.
No, and I think that right now Jay Powell's looking at an Amazon. He's very sensitive to everything, and saying, "Wow, I got to read." I mean, I don't think they get so granular as to read the quarter, but if you looked at Amazon, Amazon, Costco, and Walmart are where people shop in this country. So if you see a drop in those, that means not just substitution; it means people are hoarding and they're not going to the store. I don't think that's the case. That's why I said Amazon at 163, 164, 165. You may start there, and I think you may say, you know what, I got in on a day when they had one bad quarter.
Speaking of all that booking, lows for the year.
Right.
Glenn Fogel on Squawk said, yeah, there was some impact from lower airfares, but they didn't seem too rattled.
No, they weren't. And yet I felt at the same time that travels, you mentioned Marriott. I mean, I think that there's a pause in travel, and travel had been the strongest part of the economy. And I'm concerned about the pause because I'm trying to, as always, Dave, figure out whether Boeing. I didn't mean to call you Dave, but David.
You Daved me. Yeah.
I Daved him. That's like a barbecue restaurant. But I do think that I'm worried about Boeing again.
Yep.
Because they need the cash flow.
No, you're right to point to the travel data. That's something that I have down here in my notes as well, from those who at least are wondering how quickly the consumer is slowing down. And of course, there's that, you slow down slowly and then you slow down quickly. And are we in the quick part of slowing down?
Well,
that's the kind of stuff you hear.
Were just
Nobody
okay.
said these people are bright. I'm just telling you I'm repeating what they tell me. Guys, it is worth. Apple shares are up nicely.
Right. Well,
and the performance of that stock now for the year exceeds that of Amazon and exceeds that of Microsoft. Yeah. It's closing in on the performance of Alphabet. Obviously, Meta shares are far
Alphabet
above.
Didn't have a good quarter versus these guys.
But Apple's quarter, as you said. On the other side, we've talked about it a lot, but it is a fascinating story, if not a particularly positive one. Intel shares. You're talking about a company that has an $87 billion market value. By contrast, the company it used to crush repeatedly, AMD, has a $220 billion
That's so amazing.
market value.
When I met Lisa
if we
Su,
can, I'd love to even go
5?
back more than 20 years. I don't know if we have the ability to do that
Can
on
we do Intel versus AMD? Would that be a Houdini-like
even
chart?
over 20 years. But it just, there are losses. I mean, there are leads that are lost and never regained.
RIM.
Yeah.
Research in Motion.
Yeah.
It was the anniversary of
Research
BlackBerry.
in Motion.
Now that would be, okay. It's called a divergence. Look at that, will you? That's Lisa Su comes in. Look what she does.
Yeah.
How brilliant she is.
I remember back in the day, reports that would literally say AMD exists at the pleasure of Intel.
Well, just so it doesn't get an antitrust, so
they
it sort
talked
of
about
doesn't run afoul of antitrust law.
Right, you got to keep them alive.
Yeah, keep them alive.
Or else they'll bust up Intel.
Who was it? Sanders? Who was the?
Jerry Sanders.
Jerry Sanders.
Yeah. But look, Lisa comes in. Nice building, by the way, donates very strong to MIT.
Gave a nice building down.
She's an Easterner as opposed to one of these Silicon Valley, whatever.
Wait, where is she from again?
She's from Queens.
What borough?
She's Queens.
Yes.
I think she's from 159th. Okay, my wife's from like 163. And I do think that when...
Boring.
Like today. You see the tech sell-off underway. Is this a moment to let it breathe, or do you start to dive in and start to buy these dips in certain names?
I think you do buy the dip in certain names. I think this is a very stock-specific environment. So, as I mentioned, I think we're in an environment where you really need to see that monetization story for AI play out. And we're actually seeing that. Some of the tech companies that have done really well over the last few weeks have been companies that have exhibited that ability to turn investment into profitability and pricing. I think there's also a big pocket of stocks that look very interesting right now, which is dividend yield. So let's say we're in a risk-off environment, which it kind of feels like. What does well when the market's tanking? You want to be paid in total return, clip a coupon. And right now, even with the Fed cutting interest rates.
Bro, I had a terrible trading day yesterday.
because I was a dumbass and I went AMD calls after earnings because I honestly thought things were going to flip to bullish if we had good earnings. So that was wrong. I should have never doubted being bearish, but because I had so many freaking puts going into this morning, I'm up like 50K more than I was down yesterday, and yesterday was bad. But yeah, this was a big win here, and now I'm evaluating where to reload my puts because I don't think it's over. I think this is just morning bounce, baby.
What do you think about this investor sentiment changing here around the CapEx story for big tech? Do you agree that it should be punished the way it has been?
Well, look, I think that big tech spending, the hyperscalers, is a huge chunk of CapEx, but even outside of that, you're seeing CapEx from other areas. And, you know, I think that we're kind of setting ourselves up for an old school CapEx cycle because where we are now, we have extra activity in the U.S. The U.S. infrastructure actually receives a C- in terms of, you know, its health. And I think that's a huge liability for all of these cities and municipalities that are trying to court.
Whew. Okay, I feel like I need to take a day off now. Oh, that was good. Yesterday was so bad, but recouped the damage and made more. Yeah, but that's trading, right? It's ups and downs, you know? That's trading. So, but anyway, if you want all those alerts and you could see all the puts that I bought and the puts that I still have open right now, make sure you're part of the Stocks and Psychology and Money group. Oh, let's go. It's printing more right now. Let's go check out the Stocks and Psychology Money group. You can't guarantee you can make money. The biggest rationale I think people should be in the Stocks and Psych group is we literally sit there and do fundamental analysis on real estate and stocks every day. You know, right around 7:15 to 7:45 in the morning we start. And, you know, a lot of people play it back on 2X because they go to work, or other people, they just listen to it on their ride to work, or other people come join and leave comments. And if you are part of the stocks group or any of the courses, by the way, you can get free non-poverty chat on this channel here. So when I have the little membership thingy on, I can basically give you that membership for free from the course member live stream. So just join that there. But yeah, anyway, so as far as like outside, like getting outside of trades, I need to take a breather here. I don't want to get emotional. It's like the emotion is how you get hit in trading. You know, you're like, oh, I see a trend, and then you like double, triple, quadruple down on a dumb trend. That's happened to every trader before. It's happened to me. You know, after like a big L or a big W, sometimes you can make an oopsie-doopsie that's emotional, like a revenge trade. So you have to be careful. And it works both ways. Like you can even have a big win like today and get emotional in the, you know, and do something silly like, oh, that was brilliant. Whatever. I'm gonna go for 0 day. So definite risks there. Yeah, yesterday I'm like, I don't want to talk about it anymore. Anyway, let's just say I was so confident in my trade yesterday, I ended up going to my Robinhood account and my IBKR account, which I usually don't do, because I try to, like, I'm like, you know, let's use some money over there too. I didn't use all my money in Webull, but I'm like, yeah, let's see if we can give those a little leg up. Both of those accounts roughly doubled last night. But they're smaller accounts anyway, and you know, they just help offset some of the oopsie that happened there on yesterday on those AMD calls. But anyway, mistakes are made. But the point is now we should really analyze the broader trend here and really try to recognize, okay, like where do things go now? And that's going to be the interesting thing today. So, you know, recessions are slow, but the market moves very, very, very quickly. So, you know, keep that in mind. There's a how do you call that? What's it called? When you there's an asymmetric issue that you face, right? That asymmetric issue says, hey, you know, you could be, I don't know what I'm trying to say. I'll come back to my thought. Let me just play this for a moment.
Which is
What I'm trying to say is, like, the market doesn't have to crash today. It has to crash over the next 4 months. So keep that in mind. Like, you could be bearish for the next 4 months, but that doesn't mean your options are going to be green every day if you're on puts.
The Taiwanese boxer Lin Tu-yang, also deemed to have XY chromosomes, just won a fight against a biological female. This was just moments ago. He won. Again, what are we going to do in the future? I mean, could these boxers go through to win an Olympic gold and have a Y chromosome?
Yes, we saw this male boxer, I believe, place 5th in the last Olympics. So what we need to see, Stu, we need to see women do exactly what Angela Carini did, which I know is not an easy ask. It's easy for us to say sitting behind a screen, but that is the most powerful and the most effective way to say no. Enough is enough. We as women won't allow ourselves to continue being discriminated against on the basis of our sex, which, might I add, the same...
I mean, she's gotten very famous saying the same stuff over and over again, and I don't disagree with her, but I also don't need to hear it again. I have heard your perspective. See, with me, you never know what you're gonna get. I'm like the squirrel. I'm over here, and I'm over here. But I'm always moving forward, and I show up, usually about 2 minutes late. All right.
You bought a bottom fish in Meta, that right here in Microsoft. At, I would say Microsoft, you bottom fish at 400. Amazon 160, and Apple you don't have to bottom fish because it's doing incredibly well. I'm going to leave out Nvidia for now because it's become too emotional. I say own it and don't trade it, but it's very emotional right now, and I think you got to let the people.
Oh, hold on, I gotta tweet this. Hold on. I totally forgot. I was gonna tweet it a while ago. Okay. Here, you can watch me write it. Jim Cramer, when asked, are we going into a recession? He responds, no, of course not. Now we need the graveyard emoji. No. No. Oh, no. No, 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 no. Oh, I got Lauren to laugh yesterday. That's rare. I'm just kidding. We have a good time. But, Federal Reserve. I'll show you. I thought it was funny. I mean, y'all probably used to it by now. But she never knew that we played Fed Bingo. And so, where is it? Come on. I used that word too much. I can't find where it is. Oh, it might be. I might have it handy on my phone. But I wanted to show you the sampling that I gave her. Do I have it? Whatever. I might have to come back to find it. Oh, there it is. 133.06. Oh, that's why it's not there. Okay. 133.06. No, that's not right either. Whatever. I'll figure it out. 1 sec.
What a show, Jim. Wow.
It was a great show.
That was a lot.
And Dave, you were still the best.
Did you date me again?
Remember the guy in Narcos who looked like you?
Yes, of
that
course.
That guy's so cool.
He's also.
Oh, yeah. She loved this part. All right, let's see if you could hear this.
2%.
Oh, yep, that's too loud. All right. She loved my face. I'm pretty sure this is the part. Here we go.
The second quarter's inflation readings have added to our confidence, and more good data would further strengthen that confidence.
Okay.
We will continue to make our decisions meeting by meeting. We know that reducing policy restraint too soon or too much could result in a reversal of the progress we have seen on inflation. At the same time, reducing policy restraint too late or too...
She loved that. Like, okay. She's like, I kind of want to play Fed Bingo now. Oh, man. Ay, ay, ay. All right. So, what's going on here? Let's see what's going on in the market. Let's see here. We've got... Oh, somebody says AMD's up. Let me see. 2% bounce after selling off like 15%. So look at that. Look at that. I even said it this morning. We might have a morning bounce. Perfect time to sell. I also just don't necessarily want all the theta decay over the weekend. Like, what caddies are you going to get over the weekend? BTC finally topped out. That's not to say I don't want to pick up some shorts. Y'all know me. I like those shorts. I tried the Rob Niederhorst in the chat here. I tried those board shorts. They're actually pretty comfortable. So, what else here? Walmart, McDonald's, Procter & Gamble, Dollar Tree's down. Ew, look at that barcoding. Gross. Tesla, IWM, Snap. What are the big movers? Somebody's asking about Apple. Apple should be green. Let's see. It is 2%. Apple. Very nice. Very nice. Very nice. Okay. Is DoorDash still green? Yeah, that's pretty good. Apple, okay, all right. Tesla, well, there's not much going on there. Let me go to... Wow, Intel's down 27. Open Door, 14%. Oh, they're going to go bankrupt this cycle. Oh, no. Dude, Amazon 12%? Oh, that's not good. Let's listen over here.
Good Friday morning. Welcome to another hour.
Oh, it's Sarah.
Sarah Eisen with Carl Quintanilla and David Faber, live as always from Post 9 of the New York Stock Exchange. We are in sell-off mode here on Wall Street. The S&P down another 1.6%, adding to losses for the week. The Dow's down 470 points, and the Nasdaq getting hit the hardest, down 2.5% right now. It has been a story of weakness. The jobs report didn't help. You've got three sectors, though, that are higher defensive names: consumer staples, utilities, and real estate. Everybody else is weaker. Consumer discretionary is your worst performer, down more than 5%, but that's because Amazon is down 12%. It's such a heavy weight after earnings. We're going to talk about all of that, but technology not far behind it. Information technology also weaker. Intel is cratering. We're going to talk about that. Here's some comments from the CEO as well. The stock down 27%. Some wild moves off earnings. Take a look at treasuries, lower yields, and we continue to make new lows here with the 10-year at 3.8%. I mean, we just slipped below 4% this week, and we're heading south pretty quickly. The 2-year yield, 3.9%, as traders reassess the outlook for Fed cuts and potentially think that there are deeper ones coming. We're 30 minutes here into the trading session. Here are some big movers we're watching. More results out of big tech overnight. I mentioned Amazon. It's moving in the opposite direction as Apple on their respective results. We're going to break down what to do with both stocks and the messages from the companies this hour. Snap shares, take a look, down around 30% after revenue missed estimates. The company issued disappointing guidance. They've cut back a little bit now, down 22%. And then a similar story for Intel, which is plunging today after guidance misses, and the company announces plans to cut 15% of their workforce, around 15,000 employees, even though that had been reported. Carl, more bad news for that stock, which is down sharply.
Let's get some factory orders as well with a busy day for Rick Santelli. Hey, Rick.
Yes, Carl, these are factory orders for the month of June, expecting down 3.2. We get a little extra helping of negative news, minus 3.3. That is the weakest, biggest negative month-over-month change going all the way back to the COVID-affected April of 2020. If you strip out transportation, you could see where the negative aspects came from, because it goes from minus 3.3 up to 0.1%, up 0.1%. That is reversing last month's minus 0.7. It comps to up 0.5% in April. Now, if we look at the durable goods set of values here, what should jump out at us is that these are final reads, final reads. So if we look at durable good orders on the headline, it goes from minus 6.6 to minus 6.7, which means it remains at the biggest negative month-over-month change going back to April of 2020. And, of course, we know durable goods is a very volatile series, but this final read is highly negative. If you strip out transportation, once again, we see where the negative aspects came from. It goes all the way up to up 0.4%, very close to where we expected it to come, and that takes the place of up 0.5%, and that actually still remains the best level of the year. Last year it was up 0.6. Finally, if we look at capital good orders, non-defense ex-air, up 0.9. It only loses 1/10, a very healthy number. And if we go from orders to shipments, it also gains 1/10 from our mid-month read of 0.1 to up 0.2%. The astounding week-over-week change is historic. Right now at 395, we're down, get this, 43 basis points on the week. And at 383 on a 10, it's down 26 basis points on the week. 2's10 spread briefly looked like it was going to go into single digits. It's now minus 11. Sarah, back to you.
Okay, Rick, thank you. And with that backdrop of lower rates, weaker dollar, weaker stocks, it's about the economic data, which has turned weaker. And what's interesting now, guys, is bad news is bad news. At least that's how it's being traded. It's not being traded, hopefully, in the equity.
And good news has been good news. Or sorry, good news has been bad news. That's bad. That's like February of 22.
It was weaker than expected. There's the headline number. As you can see, 114,000 jobs added in July. That's a real step down than where we've been. It's also a lot weaker than where economists had hoped. They were looking for a number around 185,000 jobs. The unemployment rate rises to 4.3% from 4.1. Not great either, although potentially some storm impacts there. Here's where the jobs were and where they weren't. Information technology.
I'm also starting to build a swing call position, which might seem crazy right now, but I'm building a swing call position. So if you want to learn more about that, I just posted in the course member course member spot. If you're not a course member yet, remember, you get lifetime access. It could be 10 years from now. It could be from the recession of 2020, whatever we are now, we could be in the recession of 2034, and you're still getting these ideas. They're not guarantees. It's supposed to be one of those things where you're like, what does Kevin see here? What do I think about that? How does that fit into my life? Interesting. Kevin's a dumbass. Inverse Kevin. Or, I like that. That is up to you. In fact, I'm convinced there are probably some people who join just to do the opposite because they don't like me. I know. I am very hard to like. Everybody wants to punch me in the face. Until we have a beer together. Then everybody... Well, I won't go there.
Days, but obviously also this very, very volatile rotation in the market.
So yesterday's manufacturing ISM was a lot weaker than expected, well below that 50 expansion, but even deeper into contraction at 46. That started us off. And then when you got weak jobs across the board and weaker than the expectations, which were for the job market to cool down, sort of in line with where it's been cooling, that's a lagging indicator, jobs. And then you do wonder if everything we heard from Fed Chair Powell on Wednesday is stale and old, because he got some good questions from the journalist, I have to say, on Wednesday, if you read the transcript. But you go back to it, and he was pushed a number of times on, okay, is the chance of a hard landing increasing? He says no. That looks like a low probability event. Is there a chance that we're going to get a first cut at 50 basis points? He said, that's not what we're talking about right now. So there's definitely a rethink in investors' minds and traders' minds about where the Fed is going to be on the answers to those questions, because the odds of September going at 50, Carl, which we sort of made fun of.
You have not been a fan.
I am not, because the data didn't really suggest that, but maybe now, since the Fed, half of their mandate, which he said they weigh equally, is jobs. So if jobs is falling apart here, and we've broken that SOM rule where it's a 0.5 percentage point move off the lows on the unemployment rate, and we have broken that. He called it a statistical occurrence or something like that, not necessarily an economic model, but that tends to suggest we're in an early recessionary period.
Yeah, that's exactly BMO just a couple moments ago. A sizable labor market slowdown is already well underway at a time where the chair said he didn't want to see any material slowing. Tim Rose points out at the June meeting, the DOTS unemployment was 4%, and only 3 of 19 people had year-end above 4.1. We're at 4.3 now.
So it's a negative surprise.
Oh, yeah, good move, NMCT. Yeah, drop it. Yeah, as soon as you start pricing in Kamala, mark it down. We've definitely been talking about that too. Yeah, good call.
Yeah, he did.
Probably this morning feels
Alan Blinder
vindicated.
Also. Do it.
Bank of England did it. You know, they went early, and that thinking was the Fed has more breathing room. Our economy has been in better shape. It's not a complete collapse. Where was GDP? I mean, where's the next quarter tracking? We're still tracking above 2% GDP. However, if it's
Sarah,
about
you
jobs,
do a good job of keeping track as well of the commentary from conference calls, from earnings conference calls, in terms of what CEOs are saying about the consumer. And there definitely has been an increased number of people in the chorus saying the consumer is slowing.
Yes, we just got it from Amazon last night. Listen to what the CEO said there on the consumer.
While consumers are being careful on price, our North America unit growth is meaningfully outpacing our sales growth as our continued work on selection, low prices, and delivery is resonating.
Little more caution from the CEO of Clorox.
Consumers will remain under pressure, which will continue to temporarily increase competitive activity and impact category growth.
We've heard that across the consumer staples space. Evan Spiegel from Snap, weaker brand advertising environments are for certain consumer discretionary verticals. Booking Holdings CFO, there's a really mild indication of some trade downs in the U.S. Otherwise, globally, we see a steady picture. And then DoorDash doesn't see it. We're not seeing some of the challenges you may be hearing. So it's not across the board, but I do think that some of the anecdotes and the softer data, like what we got in the beige book, for instance, from the Fed, suggest a more material slowing and weakening and faster than some of the harder data points.
Meantime, big cap tech, a major story as well today, a big part of the sell-off. Apple's trying to hold on to gains. Amazon on pace for the worst day of the year. Dan Ives joins us here at Post 9, Wedbush Securities Analyst, to break down some of those numbers. Let's, I guess, begin with Apple. You seem relatively, like the phrase that's been tossed around is good enough for now. Make sense?
I'd say that was about as bullish as you could have gotten from Cupertino and Cook going into an iPhone 16 cycle, which hasn't even begun. Not just in terms of the guidance. China, I think, this is their last negative quarter from year over year. That starts to be a tailwind. Look at services, that remains rock solid. To me, it's on a scale of 1 to 10, call it a 9-8 relative. And that's why I think this is a stock that powers through the headwinds we're seeing. And it's hard to be bearish on Apple going into what I view as an AI-driven super cycle for iPhone 16.
Will there be a debate about that strength versus the macro consumer worries we just spent 10 minutes talking about?
Yeah, look, that will be the debate. But, I mean, I'll be in Asia again this week, and everything we've seen is 80 million units is what we started for iPhone 16. Now it's up to 90. So this is going to be a balancing act, as we've talked about a lot, but in terms of the data, in terms of the quarter, in terms of what you saw from Microsoft, from an Azure perspective, you look at what you saw from Google, you look at what you saw from an AWS perspective for Amazon, the AI revolution story, I believe, is well intact. And all of our checks, this is not a time to panic, despite the white knuckles that we're seeing in the market.
The FT is reporting that Elliott Management told investors recently that NVIDIA is in a bubble and the AI technology is overhyped, and that the reality is not matching the hype. You totally disagree, I know.
I couldn't disagree more relative. If we were here before earnings, before conference calls, and I think we even talked about it. Let's see what numbers look like. Look at the Azure acceleration. Look at what Lisa Su talked about from AMD. We saw what we
thought Azure was disappointing
in terms of the acceleration that they're guiding for second half. That's really talks about the monetization, that moment is right here. And my view is, look, the haters have continued to hate. The bears have been there for the last few years. I get right now it's easy to come out and kind of yell fire into a crowded theater in tech. We don't see it because it's not just from the calls.
You see the value matching the hype.
I actually think the street is underestimating what is going to be $1 trillion of AI CapEx over the next 3 to 4 years in terms of across.
Bro, this guy is gonna vomit when all of a sudden we're in a recession and Amazon's down 12%, and then guess what the first thing they do is? They go, Amazon's already down 12%, right? But the first thing they do is stop buying NVIDIA chips, delay. And then guess what happens? The story gets leaked. Amazon cancels orders to save CapEx. And then other companies start canceling orders. That is when you really start getting pain. Because yes, don't get me wrong. All the infrastructure build-outs, all that crap's gotta happen. I get it. I don't disagree. It's gonna happen over time. But they'll kick the can down the road in a recession. Yeah, a lot of folks say you're already in a recession. It's possible, you know, as you, what's it called? As you trigger the SOM rule, you're usually halfway into a recession already, right? I mean, look at the, we looked this up already. Oh, come on. SOM rule, St. Louis. We had this up earlier. You're usually when it's triggered in the recession. But you're not at the bottom. Well, at least in recent history, right? It depends where you look. You know, some people say stock market bottoms when the SOM rule's triggered. I don't look at COVID. I like to look at, because if you look at COVID, you actually, like the SOM rule didn't get triggered. Oh, the SOM rule got triggered in March. Oh, it actually got triggered. No, it got triggered in April of 2020. In fairness, V-shaped recovery, that was where we had the double dip bottom. But I like looking over here. SOM rule gets triggered, what do we say, 15 to 20 months before the bottom, because you had a double bottom. And then in 08, you triggered like a year, no, 10 months before the bottom. So like the SOM rule triggering in the last 2 recessions absent COVID, very bearish. And the fact that the market's only like, you know, what, 8-9% off highs? Why is somebody screaming Tesla, Tesla, Tesla in chat? Oh, I know, because it's going down and I have puts. Yeah, those are up $70,000. What? Oh, okay, yeah, now it's 68. I was hoping for 69. I should show the picture. Wow. So that contract's up 60%. That's good. Okay, whatever. I'm not like I think I've been pretty transparent that I think Tesla's going to 150. In case that hasn't been clear, I think Tesla's going to 150. I do think once you get emergency rate cuts, you want to buy everything. But Q3, Q4 is still gonna suck. Especially if people start getting afraid of job loss. Bro, they're gonna be some of the worst numbers ever. We'll see. Oh no, DoorDash is starting to bleed out. DoorDash. That's what you tell people when you have a job, right? It's like, I work for an international food conglomerate. Oh, really? Which one? DoorDash. What is it? I'm an executive. I'm an executive in transportation and delivery at an international food conglomerate, DoorDash. Oh, wow. I deliver DoorDash. Oh, no. It's all the presentation, you know? So, hey, Tesla's bouncing a little bit right now. Take profits. Nah. So, getting a little bit of a bounce right now. Nvidia's bouncing right there at 101. I'm very curious to see if we have a sell-off into the close. Bitcoin's trending down again. Qs are trying to bounce. Bouncy downsies. Walmart goes negative. Isn't that something? Wow, Trade Desk took a little dumpy dump. Intel almost down 30% on Intel. Holy crap. I mean, you're getting that sucker for like liquidation value right now. Jeez. Somebody says Tesla 150, never. All right, well, now I know it's confirmed. Jeez. Anyway, have I mentioned the coupon code's expired? I think I did. We extended it to today. Shoot. Okay, what else is going on? Somebody replied to my Jim Cramer tweet with, "We're going to the moon!" And then puts a picture of the moon. Dirty. Dirty. That's funny. Yeah. Memes on the internet are funny. Everybody in chat's like, oh no, we're screwed. The Joker. And here we go. Oh, he is the true Messiah. All right, let's listen to Sarah.
Happening in September. So do you think the bond market's overdoing it here again?
I think, look, maybe the front end's got a little ahead of it.
It's like 575. Richard, who's the famous guy? Is it Richard Moore or Robert? It's Richard Moore, isn't it? Richard. Oh no, Richard Moore. No, that's not. Who am I thinking of? Who's? Oh, Roger Moore. That's who you are. See, we got Roger Moore in the chat. Roger Moore wants to know how much is your course. It's like 575. It's probably gonna go. I don't know how much it's gonna go up, but it is slated to go up once this coupon expires, and it's guaranteed to go up. So if it's ever lower, you get a price match guarantee. But we don't expect that. Look at this guy. Look at this. Even Roger Moore wants to join. And I love that I'm getting an old school RuneScape ad. Let's go. Dude, you know how many times I died in this place? I sucked. I can never get my lava cake. I think I got it once, but I was good at Barrows. That's the only thing I have. Barrows and farming.
Deficits, debts, you know, we can't buy bonds. Bond market's going to collapse. Everybody's got some very negative view on the bond market. The market's not ready for 350 10-year note. The market's not ready for it. So that could be the place where we run. That could be good news for equities, too.
It has been amazing to see all the demand, even in the auctions, given all those fears. Thank you, David. And got to mention the dollar yen because we're seeing a 1.6% sell-off and another unusually large day, stronger for the Japanese yen this week. It's gained 4.5%. As we head to break, here's our roadmap for the rest of the hour. Stocks and yields plunging after that tough jobs number. Goldman Sachs chief economist joins us to talk about the road ahead.
Plus the big tech breakdown, that after a very tough week for the mega cap stocks. We're going to continue to monitor action. Of course, Apple shares, as you see, still holding on to gains. Amazon, though, down sharply.
We'll watch the chip names as well. Intel plunging, as Sarah said earlier. Nvidia lower on the week. Dow down almost 700. VIX to 25. Stay with us.
It's something else. It is something else. Oh boy, oh boy, oh boy, oh boy, oh boy, oh boy, oh boy. Alright, well, DoorDash is still falling. Let's see if it can hold on to the green today. Nvidia, nice bounce. I will give it to them. Nice bounce at the 101. IWM continues to tank. That's crazy. Actually, no, it's not really crazy. I'll tell you where it's going. Oh, look at that gap. It's going down to 202. I don't know if it'll make it there today. If it does, oh, somebody gonna print some money if you got some putters on that one. Yeah. So then you've got Tesla's trying to recover, down 2.5. BTC trending down. Q's trending down. ARM, not great. Not great. Crazy day. Crazy day, folks. Well, you know what? If we end up in a recession, the good news is we'll be together. You, me, and Roger Moore. So, with that, I'm going to push the button. Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage the ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker. There it is. All right. Thanks for being here. Go to meetkevin.com. Love y'all. Goodbye. Good luck.